So Nvidia lost something like 500 billion in a day, which is that's like 1.5 times almost the entire market cap of Ethereum.
Is going to create just businesses that are like unimaginable today.
13 or 14% drop on Nvidia in a single day because of one model. What can other innovative companies do?
Good morning, good afternoon, good evening, everyone. Welcome again to another episode of the DeFi Podcast. Today is Thursday, January 30th. I'm joined by all my usual co-hosts, Jared, JF, and Rhett. And we had a brutal start to the week this week when DeepSeek, a Chinese AI startup, unveiled a new model, R1, that's performing as well or better than its Western counterparts like ChatGPT, and allegedly doing so at a fraction of the cost that those models required to produce. So Nvidia stock started off the week down something like 15 or 20%, which is absolutely massive for a company that size. And all risk assets, including crypto, suffered massively going into the Fed decision on Wednesday. There was no relief at the Fed. The Fed decision, like before the Fed decision and the press conference, the markets were pricing in roughly 50 basis points of cuts in 2025. And today, this afternoon, Thursday, after the meeting, we're still pricing in roughly 50 basis points of cuts in 2025. So no relief and no harm really from the Fed either this week. And it left to those of us here at the DeFi Podcast thinking about AI and its implications for not only broader risk assets, but also for crypto as well. And I found out that my co-hosts have a lot of strong opinions on a number of different topics in AI. So we thought maybe we would explore those topics together on the pod, and hopefully you all will find it interesting. So first, let's just talk about DeepSeek. To be honest, I had never really heard of DeepSeek. I'm not really in the weeds in AI, but if any of you have a strong opinion on DeepSeek and the model that was released this week, happy to dive into that. Anyone want to talk about it?
I'd actually like to just start off really quick by just saying there are some claims coming out that some people are saying some of the claims they're making about its actual performance is not particularly what is stated. However, the interesting part is they did make the model that they're using on their website is open sourced. So you can actually go to their GitHub, you can download the model, you can run it for yourself. So it'll be interesting to see whether or not their claims actually hold up and if this model does perform at like a ChatGPT 01 level. Be curious to wait and see how that does.
Yeah, I think so far it has been performing well and hitting benchmarks in a good way. I think I've seen a lot of people recommending that if you're going to use DeepSeek, run it locally probably. If you look in their terms and conditions, like all of your data, like a lot of data from you will be stored on Chinese servers, which, for people who are concerned about the CCP having access to your personal information, maybe be careful. So far it looks like a really solid model. It's kind of crazy how much Nvidia lost. So Nvidia lost something like 500 billion in a day, which is that's like 1.5 times almost the entire market cap of Ethereum in one day. It's kind of nuts. And I think just like a little bit of context of this whole thing. So the whole ChatGPT LLM revolution kind of started with OpenAI going hard on the scaling hypothesis. So people have been building transformers for a while. It's a specific type of language model. And what you found is if you make the model bigger, like more parameters, and you train it on more data, it just keeps getting better and better. And that scaling hypothesis, most people think, is still continuing. Now we're hitting the limits of some elements of that because they're scaling the compute and the size of the model. There's also scaling the data. On the data side, most of these models are already trained on the whole internet. And so now people are working on figuring out how to build, synthetic data or do different things there. And then there's also scaling on the inference side. So these are the reasoning models where you let the model think for longer. And each of those seem to have room to run. And so NVIDIA has really benefited from that. A lot of people saw that like OpenAI with a couple of partners announced that they are going to spend $500 billion over the next few years building out this enormous training center. And there's several others that are just like, hey, I think as part of that, Microsoft said, yeah, we're putting up 80 billion a year. Zuckerberg recently said they're putting up like enormous amounts of money to scale out compute as well. So then when DeepSeek comes out and says, hey, we can perform basically as good as these models, and it costs us $6 million to train, it caused some people to freak out and say, oh, do we actually need all this compute anymore? Can we just, train really cutting edge models on way less? There's a couple of, I think there's a couple of things that are likely to happen. One, one other point about this like $6 million model. The company that owns DeepSeek also like has a hedge fund or like a fund arm. There's like some people that think that they probably opened up a big short position on Nvidia timed along with that announcement in order to like profit off of that news. That may or may not be true. But I've seen really credible people in the space say that they think that DeepSeek actually has like 50,000 H100s, which would make it one of the biggest AI training centers in the world. But they can't talk about that openly because there's export controls and they're not supposed to have those. That would make it probably like top 2 or 3 biggest, single training centers in the world, if that's true. And so it might be that they're just lying.
6 million figure is not accurate, right?
It could just be made up. Yeah. So so a lot of that might just not be true. It might actually be trained on just as much as GPT-4. So that's an unclear thing. Or it might be true. They did open source this, and they did a bunch of interesting, really creative training techniques that I think others will be able to utilize. So there are some cool breakthroughs there that everyone else will be able to use too. And I'm sure they kept some secret sauce too, maybe, but they released a bunch of this. And what the other thing that I think this could result in, by the way, is there's this concept of distillation, or like a teacher learner model. So say you have like a frontier model and then you train another model to try to mimic that model. You can often make a model much smaller on much less compute that can like 99% mimic the other model. If DeepSeek and others are in the end mostly doing a lot of distillation on the frontier models, and so it's like, oh, the frontier model might cost you $100 billion, but then you can make a model with $10 million that mimics it really well. My guess is that a lot of these models get more protective of their frontier models. Like, so Meta has been releasing these open source models for a while, these llama models. Like, I could see them stopping some of that. I could see a lot of these companies getting more careful. And they may just keep private frontier models that they don't even release, and then they train their own distillation models, which is what people use, so that they can keep some of this stuff secret. So I think there could be a big movement in that direction, because it's tough if I have to put $100 billion up to get a model, and then you can get one up for a fraction of the cost. One other quick thought: I think it's there's this other benefit to that, where if you really can distill these models for really cheap and then you can run them really cheap, like one of the great things about DeepSeek is it's a small enough model that you could run it on a laptop, is what that means is that these things could get used for way more applications than they currently are getting. Like, if you can get a really cheap, lightweight, high quality model, then it just broadens the scope of where we can use these things, like economically. So there's a really positive element to that. So yeah, I'll pause there.
Implications are, I was going to quickly say, implications are really interesting if you could run some of these models offline, I think. If you can get a model that you can just run on something that doesn't need to be connected to the internet, like you're saying, I think the potential applications there, I think, become really interesting.
So I think that's sort of like the greater point in the story, or the confirmation, is that, like, how fast are we moving forward? I think there was some doubts. Like, I remember the first GPT model came out, and was like, oh, this is a big step up, but how long will it take to get sort of like the V2 of this? And now we just keep seeing it. It's like happening faster and faster, and there's more players in the space. So like this, if anything, so to me, like the way I read the story is just, it's a confirmation that we are really on an exponential curve. So I'll share, I guess the slide that I've shared before on the Ray Kurzweil model of it's sort of like the 100-year Moore's law, or in this case, like the 80-year Moore's law, which shows that like the progress of technology has just been consistently just on this insane exponential curve. So this is a straight line, but if you look at the y-axis here, this is exponential. So our minds, I mean, we're human beings think linearly, right? But we apparently live from a technology perspective in a very non-linear world. I think the implications of that are very profound, quite obviously. And if we go back to Ray Kurzweil, so his prediction, which he's been very consistent on for a number of years, just mapping out this progress line, was that, and we talked about this in the previous show, was that AGI would happen around 2029. And then the singularity, which is a point at which like things are moving so fast that we cannot really keep up and we can't predict anymore. That year is 2045, so that's 20 years from now, and roughly 4 or 5 years to get AGI. That seems to be tracking more and more, which I think brings up a lot of questions about, well, what do you invest in? What do you invest in a world where like things are changing at like a speed that you can't really comprehend? And first of all, can you even make investments based on your own analysis unless you are like full time, only looking at investments and doing analysis? So like I guess I'll disclose my like biggest position. It's actually not crypto; it's Tesla stock. I've been buying since 2019. I started buying at around $17.
Nice.
And I've been buying ever since up to yesterday. So I like all those prices.
Still
my
buying up
buy,
until yesterday? Wow. Holy cow.
Yeah.
You really believe in it. Holy cow.
Yeah. I mean, I think it's going to, I don't want to give like too many predictions on this, and this is not financial advice. But I think anyone who can capitalize on AI, this exponential curve that we're on is just going to pay off. So I was able to buy in 2019. Did I say 2017? It's 2019.
No, you said 2019. You said 2019.
So I was able to buy this stock and make it essentially my whole portfolio at the time. And it's still close to my whole portfolio, to be frank. And I was able to do that while running a company full-time, working 100-hour weeks, because the progress of like humanity and the progress of like technology is just slow enough that you can actually kind of do that right now. So I can't
dude,
study
hold on, dude. But you weren't in this space at the time. So how did you get clued into, like, how did you get what were you doing? What was your 100-hour week job at the time?
I was running a startup. I wasn't a tech startup. It was a brick and mortar, like sort of a food tech startup. So we had like real like in-person employees and like operations and so on. And I was not working in tech, but I was following like just technology as a sort of a hobby. Like before going, like I try to catch like a podcast while multitasking, and I'd been doing that for like about like 5-10 years. So I've always been very interested in technology, but I wasn't working in it, and I could still like just see this exponential curve. I had a whole thesis for like robotaxis and how much that market is going to be worth. And I was able to do this. I think the point I'm making is that things were moving slow enough that I was able to do this analysis and be convinced enough in it to make one company my whole portfolio. And I was able to do that while running like a full-time company. I think in 5 years when we have AGI and like how long does a company exist before another company replaces it, right? Like if the cycle of things just keeps going faster and faster, how do you pick winners and losers? If like a startup can pop and then like 2 months later, kill the incumbent, and then 2 months later there's another one that comes in and then kills that startup. So Yeah, I have a lot of questions and not that many answers, but
Yeah.
maybe I'll just pause here and see what.
Can I just insert a couple things, just a couple quick things. So number one, Rhett, you mentioned that, if someone wants to try DeepSeek, but they're worried about sending their information to someone they don't want to send it to, they could just do it locally. To be honest, like I'm not going to run an LLM locally. I'm just too lazy, but I'm just going to plug something else, which is if any of our listeners haven't, you should check out Venice.ai. Venice.ai is the AI that's been like the AI model or whatever that's been created by Eric Voorhees, who's like, I just love that guy. He's just incredible. And I think when I subscribed it was like $50 a year. It might be a little bit more expensive, but I'm just going to share the screen real quick and show you guys how to get DeepSeek. 1 second. So here we go. Boom, share. All right. So if you're on Venice.ai, it's basically a very similar to ChatGPT interface. It's just as good. And you can just go to models here. And if you have Pro, you can scroll down and right here, they have DeepSeek, which they released it like right away as soon as the news came out. So it's like whatever new models come out, like as long as it's open source, I guess, if you have it on Venice.ai, you can try it out yourself. And they say that all of the searches and your personal information stays private. I did see some traffic on Twitter that disputed some of that. I'm not sure if Eric Voorhees responded to that. I'm sure he will, but I definitely feel more comfortable trying it out here than elsewhere. So this is a quick plug for that. But then, Rhett, I want to ask you a question, and sorry for the sirens in the background, but I saw Hasib Qureshi's take from Dragonfly, who's another guy I just love in crypto Twitter. He was basically saying that, look, this news about DeepSeek, there's winners and losers if what they're saying is true. Like they said, obviously it's really bad for Nvidia, and the market seems to be bearing that out. I mean, maybe they're lying about the compute numbers, but whatever, the market still hasn't recovered. So really bad for Nvidia. It's, of course, bad for something like ChatGPT, but they said it's really good for a company like Google, where Gemini, despite they had, all this woke nonsense in the search at the beginning, the quality of their search is actually really good. I mean, they're really good at search, of course. And to hammer on the point that you were talking about earlier, Rhett, that basically all these AI companies, they've basically crawled the whole public internet. So now it's starting to become more about whatever internal proprietary data you have. And, the biggest treasure trove of data really is YouTube. Like the number one search engine in the world is Google. The number two search engine in the world is actually YouTube. And because there's just so much content out there, and now Google has like obviously proprietary access to crawl all that data. So maybe this is an NFA, do your own research, not financial advice, but maybe the play is to, if you want exposure to AI, just to buy Google. Kind of sounds silly to buy a company at such a huge market cap already, but if they do have this proprietary moat that no one else has, maybe that's, rotate from, if you missed the Nvidia trade, buy Google now. Like, what do you think about that take, Rhett?
So that's interesting. I have heard some rumors that because of the terms of service that Google can't really utilize YouTube in the way that you normally would be able to. They would have to go and kind of redo the entire terms of service and get people, convinced to agree to that. That may or may not be true, but I've heard that may be less available to them than people think. Interestingly, I actually think that real world video data is going to become more important over time, especially as we apply huge compute to these robotics models. And the clear leader there, I think, is Tesla, because they have so many cars on the road capturing video, and then they're also building those humanoid robots. So that's some really valuable proprietary data that I think is going to be a big deal. Google has other proprietary data too. I think as far as stores of data, they're a big one. Facebook's Meta's a big one as well. There's a few of those. That's that. I do think that the data side is going to be a key piece. And then the other place where I see if you're a really good innovator, could create a good moat is if you get better than your peers at creating really good scalable synthetic data. And I expect to see more good synthetic data on the code side than other places. We probably see top tier AI software devs really soon. Partly just because it's easier to scale synthetic data for code. And if you're better at than others, then maybe you create kind of a gap there that I think is interesting. Can I push back a little bit on JF's Ray Kurzweil stuff? I've actually let me preface this by saying I've actually been a big hopeful fan of Kurzweil for much of my life, and especially like the life extension stuff. I've been excited about AI stuff. I've been excited about, etc. And some of his predictions he's been really accurate on. One of his other predictions was that we would cure all human disease by the end of the 2020s. So that gives us 5 more years to cure every human disease to hit that target. And one of the points that Peter Thiel has often made is that if you look at scientific progress, we have a narrow cone of super fast progress, and then everywhere else we have stagnation. And it's the world of bits that we have a ton of progress. So we have Moore's law, which Moore's law strictly kind of died, but like we have kind of a different type of Moore's law that NVIDIA is still pushing forward. So we're scaling compute really hard. That's improving, the things that come from compute, like AI models, et cetera. And then everything else, aerospace, longevity, chemistry, anything related to the physical world, energy is like super stagnant. So like if you look at a similar chart to what JF showed over the last 30 years of longevity or of like energy production in the US, or like how long it takes you to fly from point A to point B, or a bunch of these other things, all of them are stagnant. And my hope is that AI helps unstagnate some of those others, that it could be the thing that impacts all the other things. That's like the optimistic take. But I think part of the reason why we've had stagnation in so many other places, I think there's probably a lot of reasons, but I think part of it is we developed nuclear weapons, and then people realized scientific progress in the world of, physical atoms could destroy the world. And then like really high levels of regulation on many parts of the, many parts of what you might have used to think of as technology kind of just stagnated things. It's hard to build a nuclear plant. It's hard to design like a next generation jet. It's hard to do like cutting edge, probably like chemistry related stuff. And so I think deregulation is probably going to be really important in some of those areas. But like, and I'm hopeful, but like my fear is that this continues on a really strong trend and we get more and better software, but we still have stagnant like energy production from here to the next 100 years, and longevity just still flatlines. That would be kind of the pessimistic take.
I think that situation is a little bit different in a lot of other countries. I think your comment about the stagnation of the development of these different areas mostly applies to, the US, Canada, like North America and Europe. I don't know, probably just because they're terrible with overregulation and taxation, all these different things, where it just gets to the level of nonsense where, you can't start a business because you have to, get all these different approvals and certifications and apply to all these different things. Anyway, when you look at that progress in other countries, like Japan, for example, they have super fast, high-speed trains that can get you across the country like extremely quickly. They do actually have, medical advancement to the point where they've developed a pill that can regrow your teeth. Like a thing that nobody thought would be possible is actually like a thing that they now have as a real, actual development. So I think it's partially like location based. Curious what you think about that.
I think there's some truth to that. So like if you look at energy production, US versus China is on a steep ramp compared to us. Medical innovation is interesting. Like we still haven't seen like massive breakouts of like, oh, in this sector you have like, or maybe in this part of the world or whatever, you have like really good life extension and not other places. But there have been a few, like speaking of AI impacting the physical world, like protein folding is a really hard problem that then if you can solve protein folding in a good way, then it makes it easier to develop drugs. And protein folding was like semi-solved by the Google DeepMind team a couple of years ago. And so that should be almost like, it's kind of like, after they developed like the periodic table, then all these other people could utilize that to like discover all these other things. And I think the idea is like, well, now that we are way better at understanding, like predicting protein folding, that should have all these down chain effects that maybe we just haven't seen yet, and that could accelerate. But yeah, in some areas, I still think the whole world is currently stagnant.
Yeah. So okay, but that makes sense in this sort of like current place where we are, where like one human equals like one human's worth of labor. But that's about to change drastically. So even if like governments are not run correctly and societies are getting older and they're not as dynamic as they used to be, just imagine a world where we have like 10x the amount of labor that we have now, but we still only have to pay, let's say, the humans, right? And that other 10x is all AI. Well, now you have an economy that's 10 times bigger. So that means that the GDP per human is like 10x bigger, essentially. That might not be distributed, equally amongst all. I'm sure it won't be. But you're still talking about a world where like things are going to move much faster, even if we have bad governments. It's just inevitable. And what's going to happen with AGI? And AGI is going to make robotics possible. Brett and I actually had a really interesting conversation with someone who's a robotics expert, and he was making the point that before having the brain in a robot, it was very hard to actually develop like the physical parts of the robot because you had no feedback, so you had to like code every single part of what a robot had to do. So meaning like what Boston Dynamic did is sort of like it's pretty impressive, but it's like one little step at a time, because you have to build the robot and you have to kind of code every single bit of what that robot is going to go do, right? But
it's all
once the brain
choreography.
actually evolved, exactly. Once the brain evolved, then you can get actual feedback on the hardware, right? Because the brain goes like, you put a brain in hardware and then it sort of like doesn't work well, and then you try maybe different things, like, oh, well, this is going to work a lot better. So I think all this stuff is just moving much faster. It's going to build upon itself. And at some point, you're going to have humanoid robots, and you're going to have models like LLM types of models online that are going to be able to, just make human labor, whether that is like, I'm an accountant, I'm doing Excel spreadsheets, or I'm a construction worker and I'm building buildings. We're going to be able to 10x that labor force. And 10x is like a small, it might be 100x, it might be 1000x. I'm sure it could go, there's no, I think, like real sort of limit except how much stuff we can find to build these technologies. So Elon makes this point often, that the economy is labor. Everything in the economy is basically labor. Even if you look at a piece of hard machinery, really it's like distilled labor, right? Like, so it took like someone time to go mine that metal to build that piece of machinery, and now we're much more productive because we have like, a bulldozer instead of doing things by hand, right? But everything is labor, and when you stop restricting the amount of labor in the world, and there's no cap on it, the GDP is going to grow to like pretty incredible amounts. And I guess I'm sort of like seeing that world come, and I know what to invest in now, more or less. You could be way off because this stuff is going to move pretty fast. But yeah, just coming back to my big question is like, what happens in 5 years when we live in that world where things are moving super, super fast? There's the GDP is much, much bigger. We may not need to invest. Maybe we won't care. Maybe we'll just go hang out at the beach. But I feel like that might get kind of boring. So we might
you could have universal, human abundance where what you're investing in matters less. And another thing that I think could be interesting is like, if you really do have artificial super intelligence in the next few years, having an AI hedge fund manager could be an interesting thing, where you just give him the money, and that thing goes and does investments. Can I give another moderate countertake here? So
I'm not gonna get my question answered, am I?
Yeah.
Like,
well,
how to manage this?
I think one that was part of it is, I think, and we're already seeing it a little bit in crypto, is that AI agents are already becoming like good like analysts. I think that accelerates, and then fully autonomous, super intelligent agents that are like, running your investment portfolio for you, I think could be a real thing in the next few years. So that's part of my answer. But to push back a little bit on the speed of the change to the world. So highly recommend the Dwarkesh podcast to anyone who's not familiar. And also, one of my favorite living thinkers is this guy named Tyler Cowen, who's an economist and kind of a polymath. There's this really interesting debate between Dwarkesh and Tyler Cowen discussing this very issue of like, is AI going to like just accelerate GDP and growth? Like, is our growth rate going to go from a 2% to like a 50% or something? And Tyler basically makes the point that as soon as you alleviate one of your bottlenecks, let's call it human intelligence or even human like fungible labor, your other bottlenecks become way more important. And so what Tyler thinks is that we'll just be bottlenecked by other things. And so instead of our GDP going from a 2% growth rate a year to a 50%, maybe you go from 2 to 2.5. And frankly, over the long term, that's still actually a very big change. Or maybe we go from 2 to 4, which is a huge change. To put that in context, if you had two countries at equal wealth and one was growing at 2% and one was growing at 3%, in a year, you'd notice no difference. In 100 years, it would be about the difference between the US and Mexico. Just that small of a difference. And so it's it makes a big difference. And Tyler Cowen points out in this Dwarkesh discussion, and it might have been the one you linked, but I think there's another one where they're sitting in a different location talking about this. But he points out that like, human growth really took off with the Industrial Revolution, and that it basically just took our growth rate to like 1% in countries that were industrializing, which sounds like that's not that great. But then compounding is where it really pays off. And so, yeah, his view is, yes, it will accelerate us, but it will reveal all these other bottlenecks like super fast, and it won't have the same like insane this is it. Yeah, watch this discussion. I think it's really good. And I think both takes are very reasonable, but I did find there to be some interesting thoughts that Tyler had here of like, if you have, if you're bottlenecked by this, you maybe don't even notice these other bottlenecks until that one's gone. And then it's like, oh, now we're bottlenecked by all these other things. And so our growth rate goes to 4%. And if that is the case, then your concerns, JF, I think will be reduced because it will accelerate, which is great, but will accelerate at like a level that you'll still be able to reason about.
So my take on that is that I'm sure we'll see some of that, like, and I think the reaction to it will just be essentially the reaction that happened with Nvidia, which is that this company is now going to have an insane, whoever is serving the bottleneck and fixing the bottleneck is going to get an insane valuation because the whole economy is pushing that company to move faster. It's going to be able to recruit the smartest humans on the planet. It's going to have unlimited budgets. Hopefully it's going to have amazing leadership, which is why they're like in the number one position in their industry. So hopefully that sort of resolves. There will be struggles for sure along the way. I think once you multiply, you get rid of the cost of labor. I mean, like you 10x your labor capacity and bring the cost down by 90%. Magic just has to happen at that point. So getting to that point, I feel like we're going to have some of these blockages, but once we get to that point, these blockages are going to get solved faster and faster and faster. And we'll also be able to reason about what's the next blockage, maybe a little bit clearer, because maybe machines are better at thinking than humans, and sort of like see things coming. So let's maybe
before you proceed, I would actually like to answer your original question. So I think there's a problem with some of these takes that people have. From my perspective, I'm a fan of history, and I've done a lot of reading about previous evolutions of humanity and general historical, significant events like the Industrial Revolution, which is a good example that Rhett gave. While it was good on the whole for civilization, specifically in the countries where the Industrial Revolution was taking place, it was not a benefit for everyone at the time that it happened. It took a while for example, so you had like the Industrial Revolution began, there were these big improvements in, automation and machinery to the level where maybe you didn't need, farm hands sweeping wheat out of a field. Now you had a combine harvester that was able to do that. And you replaced those people, right? But there isn't some big philanthropist out there giving those 100 people jobs, right? And there isn't necessarily going to be a government program that gives those people jobs either. So,
Okay, can I stop you? Can I ask you a question?
Yeah.
So, if you can buy, let's say, a Tesla bot in a few years, and it's $20,000, and it can work for you 16 hours a day, and can do all your electrical work, all your gardening. It can start
16 hours. What does the robot need to sleep? What's going on? 16 hours?
Recharge. I mean, I don't
1
know.
hour recharge time.
Let's just assume some maintenance, and let's be conservative, and it's only doing sort of like twice what the normal human does, right? And it's as good as any human in all of these different like verticals, right? Like it's able to do all this labor for you. Like, is there? I mean, not everyone has money on the side, but it's likely that most people will be able to buy this robot.
I disagree.
And then
let's look at the current demand that we see for Nvidia chips, right? And let's expect that these bots will have exponential demand higher than Nvidia chips. When Nvidia comes out with a new processor or card, right, the demand is such that that thing is extremely hard for the people who can't even afford it to get their hands on it, because there are people willing to sit outside a Best Buy at 3:00 in the morning until it opens so that they can go in and buy 10 of them. There are businesses that are trying to buy up as many of those cards as they can possibly get their hand on. And so
they're going to be priced based on demand, not supply. Like they're going to be if there's a lot of demand for them.
Well, it's not just about pricing, it's also about availability, right? If somebody comes in and says, I want to buy the first 1,000,000 units that go out and no one else will have access to them, I'll pay any price to get them, right? Now that's putting that entity at a supreme advantage over everyone else, because now they're able to acquire those. That's a great deal for the company producing them, and everyone else loses out. This is the way that these kinds of things always happen, right? The same way in the Industrial Revolution, when this was happening, it initially drastically expanded the wage gap, or the wealth gap, the difference between the highest earners and the lowest earners, because there were a few people who were able to gather extreme amounts of wealth. And the only point when that was actually able to be distributed to other people was when they died and started leaving that to other people who then maybe didn't have the same vision as them, or maybe they just didn't like them very much. And then now that started getting spread out a little bit more. The other case, I have one more thing.
Jared, I think what you're saying is that most of the value is going to accrue to whoever has the monopoly on this technology. In this theoretical case would be the corporation, Tesla, which therefore makes you a Tesla bull. Is that,
I mean, potentially, who knows? Like, we've now seen what one LLM being released by a Chinese company can do to one of the largest stocks in the market. What happens when another Chinese company enters the market that can maybe rival Tesla, right? Like that effect was a 13 or 14% drop on Nvidia in a single day because of one model. What can other innovative companies do, right? If it was actually an open market with.
So let me ask you a question to the group. So we have some disagreements as to how this is going to play out, but I think we all agree that something is going to happen. There's going to be a lot of progress pretty rapidly, whether it's like hyper rapidly or fairly rapidly. So what do you invest in today for the next 5 years? And then when you get to that like future, whether it's 5 years or 10 years or 20 years from now, but where things are moving like at a very, very high speed, and there is a lot more free labor in the world and a lot more GDP per human. What do you invest in at that point? And when do you stop?
I think you'll never lose on commodities in the long run.
Some pretty important commodities that I think will become more important is crypto, because as these AI agents grow, they'll need to transact with each other and with us, and I think that digital native assets are like a really natural fit there. So I actually think that crypto is an underappreciated winner in the AI revolution. So that's a big one. And okay, look, I a lot of my net worth's in crypto, so I also there's probably some bag bias there. By the way, a slight pushback on. So Jared, you kind of pointed out that like the Industrial Revolution created some scalability that created some big winners and some other losers. Again, this is not my idea, but I find it pretty compelling that AI, at least right now, might do the opposite, because the jobs that seem like they might start getting disrupted are a lot of the like high-paid software engineer jobs, and not like the blue-collar like plumber jobs. And so what you might end up with is more equality, not less. And the other kind of thing that's pushing along those lines is you might have a bunch of companies invest massive amounts of money to get something that's highly commoditized. And that's, so, DeepSeek is super cheap. Anyone can run it on their laptop. You have OpenAI, Grok, Google, et cetera, investing huge amounts of money, but all their models are like pretty close to the same quality. And so that might get super commoditized. And so it could end up with these really dispersed winners, which would be different. I agree with you than the Industrial Revolution. I think, another way to put the robot thing, JF, is if these robots are so good they can do anything a human can do and think better than any human, then my point I'm about to make is not true. But like looking back to the Industrial Revolution as well, like as like farm equipment became more of a thing, like the percentage of the world population farming went from like, at one point it was like more than 95%. And then now it's like less than 2%. And it's like, well, that one thing got really cheap. And then people go and do all these other things that just didn't exist as industries previously. And it could be that these robots get really good at several of the things that you named, and we stop doing all of those things, and all those things get really cheap. But then there's all these other things that it's really hard to make a robot really good at, and that's where the new growth industries are. And so it totally could potentially be the sort of thing where it looks very similar to the past, just applied to things other than just applied to more categories. Now, if it applies to literally every category, which is totally a possibility, and there's literally nothing that a human is like the bottleneck on anymore, then this point's moot for sure.
Cool. Okay, let's okay, this is a fascinating time. I feel like we could go on with this for a while, but let's start wrapping it up a little bit, because we're it's really big picture. Let's talk a little bit just like in terms of what you guys are doing with your portfolios or your work. Like, obviously I think we're all in crypto thinking about how much AI affects not just crypto, but also risk assets in general. What are you positioned for, like JF has kind of phrased, like in the next year to 5 years? Does this week's news change your opinion at all? What do you think? Like for me personally, like if I could invest in something like Twitter, I can't now because it's private. I would totally do that because they have all this real-time data. I think Google is probably one of those places where, I mean, maybe despite what you said, right, maybe they're able to somehow finagle and change their terms of service and train the data. They have they have all of our emails, and they just have a great data set to train on. And then in crypto, of course, I've exposure to a number of different AI stuff, but that's all meme coins right now. I'm still keeping an eye out for real AI tech, like maybe Venice.ai, which just released a token, is something to look into, which is a relatively low market cap compared to all these other AI companies. What do you guys think? Let's just go around the circle here real quick and just say, what are you guys thinking about? Who are the winners and who are the losers?
Here, let me start. So I think my thesis is in two parts. So there's like now for the next 5 years, and then post that period of time. And then we'll see if we get there in 5 years or if we get there in 10 years. And that I think we can have logical disagreements on that. But I think there comes a time where things are going to just clearly change in terms of rapidity, like a speed of evolution of different companies. So I think like I remember calling that Apple was was going to be a great investment. I don't know, like 15 years ago when it came out with the iPhone. That seemed like pretty obvious, right? And then Amazon seemed pretty obvious as well to me. I think Amazon won for reasons I didn't expect with AWS, but still, I think Amazon was going to always be a great company. You could sort of tell, like, just even as a retail investor. I think Tesla is like the next Apple. And that's a clear investment for now. I like it. It's not financial advice, by the way. Please don't, do your own research. But this is what I like. Currently, I still think it's going to be possible to pick winners and losers in the next 5 years. So I think there's different things you could buy that will yield, good returns. And I think partly in crypto and in AI and technology-focused companies. I would not be buying like sort of legacy businesses at this moment in time. I think that would be probably a severe mistake in it, and they'll become obvious over time. What's more interesting to me is what do you do 5 years from now when you step into this world where things are like rapidly moving, we have way more labor, we have way more wealth. You may not care about investing at that point because you might just be able to just live off what you have, and that might be fine. But let's say you still want to play this game because it's fun, and you still like investing in good projects and learning about good projects and so on. Well, I think what you don't want to invest in probably when there's infinite labor is real estate, because I think your real estate becomes sort of worthless when I can get my, bot army to build me an amazing mansion for very little. I don't know if I want your apartment, So I would be bearish on that. I'd be pretty bullish on good land. So that's going to be, I think, in sort of finite supply, and that might do a lot better.
Wait, bearish real estate but long land?
Yeah, so like bearish buildings, but
I agree with that.
Okay, yeah. Interesting. All right.
I think people are not going to want your sort of like, your 2.5 or your whatever apartment that you worked really hard to get or house. They're going to be able to replicate something. There's not going to be a lot of demand for that. But amazing land, maybe not necessarily in a city, maybe on the ocean somewhere. I think that's going to just keep going up because it's going to be like in limited supply, and we're going to be able to develop that very easily in places that currently don't have roads and electricity and all that. We'll just be able to move to places like that for a bunch of different reasons, and that should go up in value. And then in terms of like any other sort of, I think there's going to be incredible companies that get built at that point also. I think the convergence of robotics and innovation in chemistry, in particle physics, and all these different sciences is going to create just businesses that are like unimaginable today. I think maybe it will be possible to pick winners and losers if you are picking a small vertical and you are taking your bot army and you're doing a lot of research with them, and then you are very, very, very focused and very fast. But I think for most people it will be impossible, and for most people probably just holding assets that are limited like land and maybe actually US dollars or crypto dollars, because those are going to be in finite supply and those might go up as the economy goes up. And that might be the new way to sort of buy an ETF. Like if you want to buy the market, maybe just hold dollars, because actually investing in all these projects is going to be potentially too hard. So my views on all this will for sure evolve. So we'll see where we are in 5 years.
I agree with the take on land, particularly land that can do something useful for you. I have a particular interest in, for example, timberland, because you can, purchase a certain set of acres of land, and that can be productive growing trees that you can then sell and, make valuable things out of that. The value of land rises over time. The value of the commodities that you can get on your land rises over time. So that's, I think, never going to be a bad investment to make. I do agree with the real estate take, although I do think that kind of lends a little bit of credence to my theory that, if the value of real estate is going to be decreasing, that also means that the demand for housing is going to be decreasing. And why would we have a decrease in demand for housing if AI is making
Population
everything
collapse.
more? Yeah, I mean, I think that's a potential thing. But as far as like what to invest in, I mean, I think crypto is a pretty great place to go as long as you're not getting into scammy rug pulls and meme coins. Find something that has value that people want to use, some kind of platform that you like that has a clear utility, and that thing will do well over time.
Sorry to interject there. I already, even before some of this AI stuff and robotic stuff was maturing more, I was kind of skeptical, like residential real estate, just because of population stagnation and in some places collapse. The U.S. is probably like a special case because depending on how many are allowed in, there's a lot of people who want to come in, and so even if the birth rate's low, there you can have a growing population there. But some of these other places where you don't have a growing population and you have people wanting to leave rather than come, like those places, my guess is like, there's another reason why homes are maybe like not going to be worth a ton, which is probably why you can buy like a castle in France for like $10. I've heard. That's probably an overstatement, but but couple of my thoughts. So I think the Nvidia sell-off was overblown. Even if DeepSeek is not lying about having H100s, which they might be, I think that there is an enormous amount of growing need, even just on the inference side. So just using the models, not training them, because like you look how useful these are. Anyone who uses them knows they're very, very useful. A small percentage of the world uses them currently. And the ones that are the most useful are the ones that are allowed to think for longer, which is basically just doing more, using more compute at inference time. And I saw, Jensen Huang mentioned recently, he thinks that inference needs will go up by, like inference compute needs will go up by about 1 billion X over the next 10 years. That honestly, to me, that seems realistic. And so even if the need for training goes down because of DeepSeek, the need for inference is still like massive. I don't currently own any NVIDIA, but I still think the scaling compute is going to be a big important thing. So I feel like that sell off was overblown. I mentioned earlier, I think that crypto as a category as a whole benefits from AI in some ways that people aren't yet like kind of noticing. So I think that whole category could be good. Within that, I think there's a few different places where you could see winners. You just ask yourself where are AI agents really beneficial? And I think like, okay, it makes devs more productive. And so you probably see an explosion of useful crypto products. So you probably see like a lot more good DeFi applications going live, et cetera. You probably see a rise of high quality AI auditors, which makes crypto safer, but also, I actually don't know of a project doing this right now, but if you had a tokenized AI, auditor that just goes around doing bug bounties and then sharing the bounty with the investors or whatever, that sort of thing could be good enough soon to be a really profitable sort of thing. So there's some things like that. There's obviously these AI meme coins, et cetera. Some of those agents already seem to be pretty useful. I think there's all kinds of different places that could show up, but I think it's like those agents that I'm most interested in right now. Like I think that like necessarily like one of the big winners is going to be some decentralized cluster of H100s or something that people are training on. It's like, no, those are going to be centralized. It's hard to get your hands on anyway, and you probably want them in one data center if you can. So that not as much. On the inference side, maybe more so. Maybe people will buy those like little NVIDIA like at-home boxes and plug that into a decentralized inference network. Sure, and that would be more like maybe Venice AI plugs into that or something. That could be potentially interesting. But yeah, I think crypto as a whole is a good one. I still think compute will remain a big bottleneck for maybe a decade. So the compute winners, and then I think there will be some big winners in autonomy and robotics. JF mentioned Tesla. There's some others in that category as well. I think the market's kind of noticed them already, but there's a lot of room to run on those innovations.
Cool. Interesting. Okay. Lots of thoughts, lots to think about. Sorry if it's been an AI heavy episode, not really specifically about what's happening in crypto. We'll return to some of those crypto specific topics next week, but AI is the main risk asset right now, kind of drives everything. When Nvidia tanks, all of crypto tanks. So it's kind of hard not to think about it a little bit as a crypto, investor, builder, degen, etc. So, okay, well, that'll wrap it up for this week. Thank you guys for your thoughts. We'll be back next week with another episode of the DeFi Podcast. Thank you everyone for listening. Cheers.